Tax season is here, and for many who haven't filed yet, the April 17th deadline is fast approaching. The IRS says it's received less than 60% of the individual returns expected this tax season. Dan Geltrude is a certified public accountant and a tax and business finance expert. He joins us now to discuss how to make this final stretch less daunting. Good to see you.
Good to see you.
So this happens every year. Everybody waits to the last minute to do it. I remember one year, maybe this is 2 years ago, I was actually anchoring here on the afternoon shift, and I had to get to the post office. And so I was like trying to leave the desk and make it to the post office before it closed to do my taxes. What are people's concerns this year?
I think the primary concern right now is there's some confusion about whether the new tax law is going to be impacting their current tax filing that is due for April 17th. And the answer to that question is no. Your taxes are going to be consistent with last year. The new tax law takes effect January 1st, 2018. So the things that are going on related to the new tax law, that's something that we'll be dealing with next April.
Okay, so these things won't go into effect. What should people be doing to consider lessening their tax liability?
So right now, for the current year, or we should say last year, current year filing, it's a little bit late in the game. However, there are a couple things that you can do. First of all, you can make a contribution to your IRA. If you're under 50, you can make a contribution of $5,000. If you're over 50, $6,500. Now that's a dollar-for-dollar reduction of your income, so you get tax benefit this year. Plus, on top of that, you have savings for retirement, which at the point of retirement, when you pull that money out and the tax is due, you will probably be in a lower tax bracket. So it's a good tax play.
And what should people be thinking about for next year? Because that's going to be, things have changed.
So the first thing to keep in mind there is not everyone is getting a tax cut. If you're in a high tax state, New Jersey, New York, California, Connecticut, those states, there's a very good chance that your taxes have actually gone up. So what you need to pay attention to right now is the withholdings in your paycheck. For some people, they've been realizing more money in their net check because they're projecting that they're going to have tax benefit from the new law. However, if you're one of the people where your taxes are going to be going up as a result, you need to adjust your withholding accordingly. Why? If you don't, you could be looking at underpayment penalties for next year. So it's important.
That's really important. I want to ask you, Dan, about the massive Equifax hack. As you know, nearly 150 million Americans had their information compromised back in 2017. It was the largest hack. What problems could this compromise pose when people file next year?
It's a good thing to think about right now. So for people who are waiting until the last minute, not so great, because if your information was compromised through the Equifax hack, what you could have is people trying to file a tax return on your behalf to steal your refund.
Wow.
So the longer you wait, the more you're giving those hackers a chance to file a fraudulent tax return.
So if somebody discovers that has happened, what should they do?
So what happens is most people are filing electronically. So you go to file your tax return, and the tax return will get rejected because the IRS will tell you, we already have your tax return. But you know that's not true. So what happens is you have to notify the IRS that a tax return has been filed fraudulently on your behalf, and then there's a process you have to go to then manually file. The IRS will give you a new tax identification number to file separately from everyone else so they know that your tax return was compromised.
That is great advice. Dan Geltrude, thank you so much for stopping by.
Thank you.
Good advice. Thank you.